If you was to die, would your mortgage be paid off? Welcome back to the channel. My name is Glen. I'm a property investor and a qualified mortgage broker. My channel is about everything to do with property and finance. And if it's your first time at the channel, please consider liking, subscribing and becoming a part of the community. It's totally free and it's much appreciated. Now, if you want to speak to someone professionally about what I cover off in this video, then see the link below or feel free to comment on this video. So watch to the end of this video and I'll cover off what happens to you if you was to die when having a mortgage and if you don't have anything in place. Now, firstly, with anything to do with property, you should always consider insuring yourself in case the worst was to happen. If you were to die, then your mortgage would still need to be paid. If it's a joint mortgage, then the debt will just be passed on to your partner or next of kin. This could then put that person in financial hardship through no fault of their own. Yes, they could sell the property, however there are loads of factors involved that could mean that they can't sell the property, and it also takes time to sell a property. So this could mean having to try and find the money to pay the mortgage or selling the family home just to clear the debt. This, however, can be avoided if you have the correct cover in place. Now, it's very important that you speak to a regulated professional when you're looking at cover, because each individual cover is different for each individual person. Now, a standard life cover policy can insure you for as little as £5 per month. This is subject to the amount of cover that you require and also your medical history and health. This means as long as you keep up the monthly premiums, then a lump sum will be paid out to either yourself or your beneficiary that you choose, and this payment can be used to clear the mortgage or maintain the monthly payments. Now, the last thing I'm sure you agree that a loved one wants to be doing is worrying about money when they're trying to deal with grief of losing a family member or a loved one. Now, these policies can be set up really fast and really easily if you do it the correct way. But please be careful if you're looking to do this yourself online, and I would always recommend speaking to a professional to get this set up. Remember, cheaper is not always better. And what is the point in paying a cheap premium or any premium per month if it doesn't do the job that you want it to do when you need it to? Now, critical illness is just as important as life cover. Now, this can be slightly more expensive. The reason why that is more expensive is sadly statistics state that 1 in 2 of us nowadays, at the date of recording this video, are likely to get a critical illness within our lifetime. This can include some of the common ones as well, such as cancer, a stroke and a heart attack. 1 in 2 people, that is a scary thought. However, all of this can be avoided if you just take the time to set up the right policy for you, which will give you and your family the peace of mind.